This has been a most fascinating and interesting year in gold. Over the last 3 months, after reaching an intraday low, and it was a new record low for gold since it had traded to a historical high at 1900 plus, down to about 1071, that in July. And from that point forward, it has been clawing its way back up to higher pricing. The first rally taking it up $100, and still the effective high over the last couple of months when it went to about 1171. From there it came down and it actually tested 1100, that becoming a new level of support. So we did get a series here in which we saw a low and then a higher low, but up until this point, we'll still have to see how it pans out, we have not seen a higher high. In fact, the next high came in considerably lower at about 57, and that hasn't been breached till the most recent trading activity, this being recorded on Monday, the 12th of October. However, the really big picture doesn't come in unless we compress this chart, and when we do that, we discover that gold in essence is trading where it had been trading at the beginning of 2015. As important as the high that was achieved so far this year is this bottom that we saw at 1071, because it is my current belief that this bottom represents a final bottom to the dramatic sell-off we've witnessed over the last 5 years. Now, there are a couple of primary reasons why I believe we could have, in fact, seen a bottom at 1071. First is really based upon an Elliott wave count. This record top completed a major third, and this long wave down actually represents the conclusion of a major fourth wave. Secondly, when we look at the Fibonacci-based retracements long term, there are really two critical or key areas that I am looking at. Now, the first of these two Fib retracements really begins about 300 up to 1900. The second Fib retracement starts after the market has hit 1000 and retraces to about 700, so 700 to 1900. A 50% retracement of the entire move takes us to a low at 1092. And that's the reason I believe that we could be looking at a potential bottom or low for this cycle currently in the market. And effective closes, or once the market trades above 1156, that breaks the 61% retracement of this smaller move. I do believe that we should see this market begin to move up to higher ground from this low. I think that we'll see this market move to roughly 1300 by about the mid-2016. We should be able to see this market take out this existing high at 1230 by the end of this year. This has been Gary Wagner, wishing you as always good trading. Bye-bye.